Hello, everyone. Thank you for joining us. My name is Henry Duong, and I'm the Education Manager and Los Angeles Field Representative at the California Association of Nonprofits, or CalNonprofits for short. Welcome to the Accessing Public Service Loan Forgiveness webinar. And I think we're in good shape. I hope everyone has settled in, and let's get started. So to kick off the presentation today, it is my pleasure to introduce Lucy Salcido Carter, who is the Public Policy Director at CalNonprofits. Take it away, Lucy.
Okay, thank you, Henry, and welcome everybody. Clearly, this is a really useful topic for everyone. It's really great to see so many people here. So I am the Policy Director of CalNonprofits. We're a policy alliance of more than 10,000 member organizations, and we advocate for policies that protect and enhance the ability of nonprofits to serve our communities. We've taken on the student loan issue as an important policy concern for us because we know that many nonprofit employees, I'm sure there are many of you here, who have significant student loan debt. In fact, we did a survey in 2016 and learned that 23% of nonprofit employees have student loan debt of $90,000 or more. And we know that this student loan debt hampers the ability of nonprofits to recruit and retain a workforce. So as part of our advocacy work in this area, we are part of a national coalition to improve the public service loan forgiveness program, along with some of our partners that you'll hear from today. We also have a toolkit to help nonprofit employers support their employees who have student debt. We'll put a link to that toolkit in the chat. It's on our website. We are also offering nonprofit employers who are CalNonprofits members discounted access to what is called an essential account with Savvy. Savvy is an online tool to help student loan borrowers better understand their debt, optimize repayment options, and enroll in the best plan for them. The essential plan includes some one-on-one access to a student loan expert. So we'll put some information in the chat about that as well. At the state policy level, we have supported legislation to strengthen student borrowers' rights, including a bill called Assembly Bill 376, the Student Borrower Bill of Rights, which among other things provides for student borrower Ombudsperson at the California Department of Financial Protection and Innovation. You're going to meet the Ombudsperson in just a minute. We also supported Assembly Bill 424, which provides unique protections for student borrowers with private loans. So we are going to continue to advocate for policies that protect student borrowers and that provide real opportunities for nonprofit employees to get debt forgiveness through programs like the Public Service Loan Forgiveness. So with that, I want you all to meet our new California Student Loan Ombudsperson, Celina Damian. Celina, can you say a few words about your role and how folks can connect with your office? And then we'll jump to our PSLF speakers. Celina, over to you.
Thank you, Lucy. Good afternoon, everyone. My name is Celina Damian, and I am the Student Loan Services Ombudsperson at the California Department of Financial Protection and Innovation, also known as DFPI. I want to thank, CalNonprofits for inviting me today. It is my pleasure to be here alongside panelists who have been working hard to support student loan borrowers and who share our same mission to empower them with the information they need to make the best financial decisions for their future. That mission starts with making sure that student borrowers understand their rights, which are broader here in California, thanks to the passage of the Student Borrower Bill of Rights and other protections. The DFPI is the state's financial regulator and consumer protection agency. Our mission is to protect California consumers, such as yourself, by regulating financial activity, licensing financial service providers like student loan servicers, and enforcing state laws that create a fair and resilient marketplace. We're also responsible for fostering trust and responsible financial innovation, emphasis on responsible. Critical to our work is ensuring that consumers understand their rights when using financial products and services so that we can help them becoming victims of financial fraud. We are especially focused on working with the populations that have been historically underserved, including seniors, students, military service members, and immigrants. We receive thousands of complaints from consumers every year, and we review every complaint that comes our way. To make our services accessible, we offer translation services in dozens of languages and have a call center where the average wait time is typically under 5 minutes. With the landmark California Consumer Financial Protection Law, the legislature approved expanded authority to provide more comprehensive oversight of the financial industry. For the first time in history, we can regulate debt collectors, student loan debt relief services, and private loan servicers. And thanks to Governor Newsom's $10 million budget proposal to help student borrowers, that focus may soon come with additional resources, including a statewide communications campaign and a grant program to fund community-based organizations and legal aid groups providing direct support to student borrowers. Within DFPI, we have a legal and enforcement unit that monitors student loan servicers and takes legal actions as necessary. A supervision unit which examines and licenses private student loan servicers, and a consumer services office where student loan borrowers can submit complaints if they're experiencing problems with their student loan servicer, if they encounter unlawful activity, or if they are a victim of fraud or scams. As Lucy mentioned, my role was created under AB 376. As the state ombudsperson, I work closely with other divisions within our department to evaluate the challenges you are facing. I monitor the development of federal and state laws, rules, and regulation and policies relating to student loan borrowers. I partner with other agencies to reach student borrowers, and I also respond directly to student borrower complaints received by our Consumer Services Office. I am available to work directly with student borrowers. I understand that repaying student loans can be complicated and even a little frightening, and my role is to ensure that borrowers know their rights and that they have access to resources and information that will assist them in navigating their student loan debt. As many of you know, and as the governor has underscored with his budget proposal in 2022, there are two important deadlines, May 1st and October 31st. Millions of California borrowers will restart their student loan payments on May 1st, and the public student loan forgiveness waiver will expire on October 31st. We want to ensure that borrowers are prepared for repayment and that public service workers apply for the waiver. The information provided today is critical, and I would encourage you to listen closely, take notes, and share the information with others. Even if you don't think you qualify or if you've been unsuccessful in the past, I would urge you to reapply. As we speak, borrowers are getting their loans forgiven and even receiving refunds for overpayments. I, as well as I'm sure the other panelists, are available with any questions, not just PSLF repayment, any repayment or an issue specific to your student loan servicer. Please take note of my information, which will be provided, and feel free to contact me. I can also assist Spanish-speaking borrowers. DFPI also has an upcoming webinar series for student loan borrowers. So if you are interested, you can subscribe and receive updates at our dfpi.ca.gov website. Thank you for your time today, and thank you for your help in connecting student loan borrowers.
Well, thank you so much, Celina. I mean, this is just amazing, all of the services that are going to be available through the office and with your help. So I'm really glad that people are able to see you and that you were able to be here on this webinar so they have a face to a name. And we will put information about how to reach Celina in a slide later on, and everybody will be getting a link to the recording of this webinar as well as a copy of the slides, which will include the contact information I just mentioned, and also other resources that end up in the chat. So are you available to take some questions in the chat? Can you stay on for a few minutes if folks want to ask a question or two in the chat?
Yes, I am.
Okay, great. Thank you so much. Okay, I want to move on to our other speakers. I want to introduce our two speakers who are going to focus on the Public Service Loan Forgiveness Program. Ashley Harrington, the Senior Advisor to the Chief Operating Officer of the U.S. Department of Education, Office of Federal Student Aid. Thank you, Ashley, so much for being available to talk to us from the Department of Ed and the federal perspective. And I also want to welcome Amy Czulada, the Outreach and Advocacy Coordinator at the Student Borrower Protection Center. So I am going to turn it over to you and just remind people that we will have lots of time for your questions. So hang on to those questions, put them in the Q&A box, and we'll get to them soon. Amy and Ashley, over to you.
Thanks, Lucy. Hi, everyone. Ashley Harrington, really excited to be here. Thank you, CalNonprofits, and thank you, Student Borrower Protection Center, for putting this on. We are really excited about this work that is happening around the public service loan forgiveness waiver. You know, for too many borrowers for too long, they were not being able to access this program. The benefits were elusive, whether it was because of servicing errors or technicalities, issues with what type of loan or what repayment plan counted, what was a qualifying payment, what was a qualifying employer. There were all sorts of questions and issues with this program, to the point that so many borrowers were thinking they were on the track for forgiveness, were applying for forgiveness, and weren't getting it. And so the Biden-Harris administration has really prioritized making sure the student loan program and the relief programs that exist work, and that they work for more borrowers. And we are particularly interested in making sure that the opportunity and the promise of public service loan forgiveness is available to every single public servant, federal student loan borrower in this country. And so this is part of our outreach to make sure everyone knows that this opportunity is available, that we are making this program work, that if you have heard negative things about this program in the past, if you have heard that it's complicated, that it's not worth it, that has changed. We are actively working to make sure that we fulfill this promise and that borrowers get relief and credit that they deserve and that they've earned. So really excited to be here. You know, we have really worked to touch on those pain points I mentioned: problems with repayment plans, problems with the type of loan that qualifies, problems with what is a qualifying payment. And so I think as Celina mentioned, this is a time limited opportunity, right? This is a limited waiver where some borrowers are going to have to consolidate into direct loan programs. Some borrowers who are going to have to submit public service loan forgiveness forms who never have, or submit extra ones that they already have. And some borrowers are going to have to do all of this before October 31st, 2022. We can't say that enough. We can't stress it enough, because we don't want anyone to miss out on this opportunity and not take the steps that they need to take. We're really excited that almost 70,000 new borrowers have gotten relief through this waiver, close to $5 billion. You heard mentioned that some people are getting refunds. People are literally getting checks back based on their overpayments, and they're getting their debts wiped clean. And then those numbers are changing every day. Over the next couple of months, borrowers who aren't quite eligible for forgiveness are going to see their payment counts go up. So maybe they were at 80 payments before, they might go up to 90. Maybe they were at 50, they might go up to 60, right? Over the next couple of months, you're going to start seeing those changes, and it's going to continue to improve. We are working to automate processes. We are working to make this program not only work, but make it more easily accessible. We are constantly working on making our PSLF help tool better, and you're going to hear a little bit more about that from Amy from SBPC. We are constantly working on making sure that people have the information that they need, that they know who to go to for a signature, that they know where to find an EIN, or that they know which employers qualify. And we're also looking at, beyond just the waiver, there's rulemakings going on to do long-term changes to PSLF to make it continue to work better even after this waiver is up. And a lot of that is due to advocacy of organizations like CalNonprofits and SBPC and others, many of you on this call, who have actively worked to make this program work for you and for borrowers across the country. So I'm really excited to be here. I'm going to turn it over to Amy to walk through what we mean when we're talking about the waiver and what folks have to do, and then I'll be here for questions at the end. Thank you.
Thanks so much. Thank you for having me today. My name is Amy Czulada, and I am the Outreach and Advocacy Coordinator at the Student Borrower Protection Center. And a little bit of background on the Student Borrower Protection Center. We're a national nonprofit organization solely focused on alleviating the burden of student debt in the country. And we engage in a mix of advocacy, policymaking, and litigation strategy to rein in industry abuses, protect borrowers' rights, and advance economic opportunity for the next generation of students. I'm so excited to speak with you all today. Thank you again for having me. Just a reminder before we begin that if you have questions, if you could put them in the Q&A function in the webinar, that would be really helpful because my colleagues will be going through the questions to find common themes so that we can answer as many questions as possible after the presentation. But let's start on public service loan forgiveness. Okay, so to get started, we're going to talk about the program as it was created and how it functioned until very recently. So Congress created the Public Service Loan Forgiveness Program in 2007 to help public service workers who are struggling with their student loan debt, and also to make sure that future students and graduates wouldn't be deterred from entering public service because of their student loan balances. To put it simply, PSLF is the promise that if a borrower works in public service for 10 years and makes payments for those years, the remainder of their debts will be forgiven. But as we'll see, it's a bit more complicated than that. First, I'm going to explain how the program worked, and then what some of the issues were, and then how you can benefit from the most current waiver period to access your own PSLF loan forgiveness. So how does PSLF actually work? More than simply working in public service for 10 years, there are normally 4 specific criteria. So first, you have to have a direct loan. That's one of the several federal loan types. Second, you need to be in the correct repayment plan, which for the program is generally an income-driven repayment plan or an IDR. Third, you need to work in a public service field. And finally, you need to make 120 qualifying payments, which is 10 years worth of payments. And I'll drill down on some of these for a moment. So only direct loans qualify for public service loan forgiveness. Direct loans have been the main federal loan since 2010. So if you took out a loan since then, it likely qualifies. But if you have an older loan, a federal family education loan or a FFEL loan, or a Perkins loan, those don't qualify. What you can do though, is you can consolidate those loans into a new direct loan, which is like refinancing with the federal government, and it pays off your old federal loan and replaces it with a new federal loan. Under the normal program, when you did this, you lost any credit towards forgiveness that you had earned on the old loans that you're consolidating, since you're essentially taking out a new loan. But as we'll discuss, during the waiver period, this isn't the case. So it's important to know that under the normal program, most people were blocked out of the program completely based on their loan type, and it had nothing to do with whether they did their 10 years of public service. Second, your direct loan needs to be in the right repayment plan, which is generally an income-driven repayment plan or an IDR. It doesn't matter how much you pay, it's just that it's the right plan. These plans go by names like income-based repayment or IBR, income contingent repayment or ICR, pay and repay. Some other payment plans can qualify in certain instances, but in general, you want to be in an IDR plan. Third, to get public service loan forgiveness, you need to work in public service. The focus is on your employer and not on your role. You can work at a government organization, so that covers most city, state, and federal employees, a 501c3 nonprofit, or certain other nonprofits. You also have to work full-time, which is defined as 30 hours a week, or what your employer says is full-time, if it's more than 30 hours. And the 30 hours can be with more than one employer if you have multiple part-time jobs at different public service employers. Finally, you need to make 120 of these qualifying payments, which are payments on the right loan, the right payment plan, and during the correct employment. And these payments have to be made in full and on time. And if you leave public service and then come back, you can continue accruing credits and don't need to start over. The payments don't have to be consecutive. So there were some impacts of COVID on the public service loan forgiveness program. First, for those loans getting the payment pause, those owned by the federal government, each month of suspended payments counts towards PSLF loan forgiveness, toward the 120 payments. However, you still need to meet each of the other criteria, and the most relevant criteria is that you still work for a public service employer. Now we'll talk about what has changed in the program and why. So as I'm sure you're aware, the initial rejection rate was 99%. Only some 800 applications out of 90,000 were approved, and folks were being denied because they had the wrong loan, or they weren't in the right repayment plan, or some other technical reason that had nothing to do with whether or not they actually did 10 years of public service work. And as you can imagine, this was a huge problem and an incredible failure for the public service employees that PSLF was meant to support. Many folks took out debt to get the education they needed to be teachers or government lawyers, specifically because they had been told that after 10 years of affordable payments, the remainder would be forgiven. But some really good news is that in summer of last year, of 2021, the Department of Education, for the first time ever, opened a request for information and asked borrowers to tell them about their PSLF experience. This was an opportunity for borrowers who had worked in public service for 10 years, but who were locked out of the program because of the bureaucratic criteria, or someone who had delayed retirement to get extra qualifying payments, to ask the Biden administration to fix the program once and for all. Nearly 50,000 borrowers submitted comments during that time, and they all included a common thread that was the program wasn't working for those it was meant to work for. So within weeks of the request for information period ending, the federal government announced a special waiver that would address many of the issues raised by borrowers who filed comments. So for a limited time, the Department of Education will retroactively grant credit towards PSLF loan forgiveness to borrowers for months that previously didn't count for the program, either because they had the wrong loan type or weren't making the right payment. We'll walk through each of these changes now. So essentially what the department's waiver does is give public service workers credit towards loan forgiveness, regardless of what type of federal student loan they have, and as long as they were in qualifying public service employment and their loan was not in default, deferment, or forbearance. Even for months in which borrowers didn't actively make a payment, as long as the loan was in repayment status, they can receive credit. These credits will be retroactive, so borrowers can receive credit for past payments that were previously ineligible. In short, for any months since October 1st, 2007, that a borrower had any type of federal loan, worked for a qualifying public service employer, and wasn't in default, deferment, or forbearance, that borrower can receive credit towards the 120 months required for loan forgiveness under PSLF. However, it's important to note that this waiver isn't completely automatic. Normally, PSLF requires that borrowers have a specific loan type, direct loans, as we discussed. Although the waiver allows borrowers with any loan type to get credit, those without direct loans must take some steps in order to convert their loans into direct loans through a process called consolidation. But they will still get credit for the time before the conversion. And almost all borrowers, regardless of loan types, will have to certify with the Department of Education any periods of qualifying public service work since October 1st, 2007. And the idea there is that if the government doesn't know when you had qualifying work, it can award the right number of credits. Importantly, the department's waiver only lasts until October 31st, 2022. So that means that any borrower who must change their loan type through consolidation or certify the public service work with the department must do so before this deadline of Halloween of 2022. This doesn't mean that everyone will receive their new credit toward loan forgiveness by that deadline, just that the paperwork has to be completed. And credits will be given on a rolling basis, and the department may take more time beyond this date of October 31st, 2022 to process everyone. But if you get credits from the waiver, those credits are permanent. So if you don't receive enough to meet the 120 credit requirement, you can continue to accrue more credits after this deadline, adding to those that you received during the waiver. So with that in mind, there are 3 things all public service workers with federal loans should do. To figure out how this special waiver applies to you and what steps you need to take, every borrower should do 3 things. We'll talk about each, but briefly, they are to confirm your past and present employers are qualifying public service employers, determine your loan types and consolidate if necessary, and then certify your employment with the Department of Education. So first, confirm that you have a qualifying employer. Nothing about this requirement changed during the waiver. You still need to work in public service, except that for during the waiver period, you don't need to still be employed at the time that you apply for forgiveness after your 120 payments. Remember that qualifying employers include any government employer, so federal, state, local, or tribal, and any nonprofits that have a 501c3 tax-exempt status. Certain other nonprofits also qualify. However, unions and political organizations do not. nor do any for-profit employers. If you aren't sure whether your employer qualifies as a public service employer for PSLF, the Department of Education maintains a list of qualifying public service employers that you can search. It's important to note, though, that this list isn't necessarily exhaustive. So if your employer does not appear, but you still believe that you're eligible, you can continue with the PSLF process. You can access this list by using the PSLF help tool available at studentaid.gov. The employer database is the first step in the help tool, so you can quickly access it to check your past and present employer status. Step 2, what type of federal loans do you have? The three major types of loans that most folks today have are direct loans, federal family education loans or FFEL loans, and Perkins loans. For public service workers to get loan forgiveness for their FFEL and Perkins loans under the PSLF waiver, they'll have to consolidate, which is like a refinancing process, those loans into a direct loan. Remember, what's special about the waiver is that normally when you consolidated your loans, you lost any past credit towards forgiveness, but during the waiver, you can keep that past credit and apply it to the new consolidated loan. The final step that all public service workers with federal student loans should take is to certify their qualifying employment with the Department of Education. Remember that qualifying employers are any level of government, 501c3 nonprofit employers, and certain other nonprofit employers. The form to do this is called the PSLF form, but it was previously called an employment certification form. Borrowers should certify their employment using the PSLF help tool, which is the same tool that they can use to confirm that their past and current employers are qualified for PSLF. And that tool will generate the form for you, which your employer will have to sign. Okay, so we've just discussed the 3 steps borrowers should take. Now I'm going to briefly show you some step-by-step instructions on how to do this, starting with confirming that your employer is PSLF eligible. So you'll need to log in to studentaid.gov, hover over Manage Loans located in the top toolbar, and then click on Public Service Loan Forgiveness in the drop-down menu. You'll see the PSLF help tool there, which you should click to launch. Borrowers can look up all of their employers since October of 2007 in the help tool by entering their tax employer identification number, or EIN, and their dates of employment as well. You can check your employer's EIN by looking at your W-2, by asking your employer, or for some larger employers, you might be able to Google them as well. If your employer appears when you run the search, your employer is a confirmed public service employer, so you should just proceed to the next steps of checking your loan types and consolidating if necessary. If your employer doesn't appear, you could still be eligible, as this list isn't exhaustive. It might mean that no one from your place of employment has sought PSLF in the past, so don't be discouraged by this, especially if you work for a government agency or a 501c3 nonprofit and you know that you're eligible. Some eligible employers will show up as ineligible. Okay, so once you've determined whether your employers are eligible, you should confirm what types of loans you have. This can be really confusing, and many folks don't necessarily know. So to see all of your federal loans, you should log into your online account with studentaid.gov. And I should mention that if you don't know your login information, there is a way to reset it and get access. You'll have a dashboard there that lists your loans, and any that say direct are direct loans, and any that don't say direct will have to be consolidated. For a more granular list, you can download your loan data, and you can see on this slide how to navigate to your data. Once you download your aid data, you'll be able to tell what type of loans you have. Here you can see 2 screenshots of the data report. At the top, each says loan type and each says FFEL for the federal family education loans. They don't say direct, so they'll have to be consolidated. Now, on this report, you'll also see loans that have been paid off already or have been already consolidated. You don't need to confirm the ones with you only need to confirm the ones with a balance, because those are the ones that you're trying to consolidate to get forgiven. Now, if you have non-direct loans, you'll want to consolidate those. So to consolidate your loans, you'll need to log into studentaid.gov again. You're going to be really familiar with this website by the end of this process. Hover over Manage Loans, located in the top toolbar again, and then click on Consolidate My Loans in the drop-down menu. you can access the consolidation application here. It'll then guide you through the steps you'll need to take, which include selecting which loans you want to include in the consolidation, confirming the amount and rate of the new loan, selecting your payment plan and servicer, and then signing for the loan. Now here is a tip specific to the waiver. So if you have a mix of older and newer loans, so some of them will be closer to the 10 years needed for forgiveness under PSLF. If you consolidate all of the loans together, the new loan will be awarded as much credit towards forgiveness as your oldest existing loan. So if you consolidate old and new loans, when the consolidated loan is ultimately forgiven, the entire amount will be forgiven. This is useful for folks who have older FFEL loans and also newer direct loans. You might not think to consolidate your direct loans because they already qualify, but if you do consolidate them, they could be forgiven on the same timeline set by the FFEL loans. Remember that for the regular PSLF program, you need to be enrolled in an IDR plan. So when you're consolidating, it's a good idea to select one of the IDR plans as your payment plan. And again, some of the names for these plans include income-based repayment, or IBR, income contingent repayment, or ICR, pay and repay. Okay, so finally, let's review how to certify your employment. So just like with confirming your employers, you'll need to log into studentaid.gov again, hover over Manage Loans, and then click on Public Service Loan Forgiveness in the drop-down menu. We're going to go back to the PSLF tool here. You'll remember this step from earlier, the first step in the tool to look up your employers. So when you go there, you'll add your employers again and include the dates of your employment. And then the PSLF help tool will guide borrowers through the next steps, including identifying which loans they want to include for PSLF loan forgiveness. And once you complete each of the tool steps, it will generate a form that you can use to certify your employment. Again, this form is called the PSLF form, but formally it was called the Employment Certification Form, or ECF. And it's the form that you must submit in order to receive the benefits of the PSLF waiver. Once you have the PSLF form, you'll need to have any employer you're claiming as a public service employer sign that form. Once the form is signed, you must submit it to the designated federal student loan servicer for processing to make sure you get the maximum benefit that you qualify for. Everyone must submit a new form that reflects all of their qualifying public service work by the deadline of October 31st, 2022, in order to benefit from the waiver. So what's the process for getting forgiveness? This is the general process, but it applies to the waiver as well. FIA, operating as Fed Loan Servicing, is currently the exclusive servicer for public service loan forgiveness. So borrowers seeking PSLF need to send the PSLF form to FIA, which will do a preliminary review of loan eligibility. And if you have a qualifying loan, your loan will then be transferred to FIA for servicing, at which point it'll run through the other criteria, such as employment and qualifying payments. Unfortunately, there have been a lot of problems with people finding out too late in the game that they thought they qualified, but something had been wrong. So for this reason, we advise you to submit a form as soon as you're interested in public service loan forgiveness, and then do it each year until you qualify for forgiveness, and also do it every time that you switch employers. You don't have to do this. You could wait until the end of 10 years, but this way you have a great chance of catching any issues that might arise and dealing with them right away. The Department of Education has stated that they are continuing to review PSLF cases on a rolling basis, so there's no exact timeline for when you'll receive notification from them. You also may have read that FedLoan is ending its contract with the department. This is true, and it was recently announced that another company is taking over. At this point, it's still okay to have everything go to FedLoan because the transfer won't happen for a little while, and if anyone has to have their account transferred, the companies can handle it. However, you should keep your own copy of your records because sometimes things get lost from one company to another. So just to review some basic important takeaways from this presentation. So remember that credit will be given for months during which any loan type was in repayment status. The deadline to submit all your paperwork is October 31st, 2022. That's the deadline to either consolidate if you need to, or also submit your PSLF forms. You should confirm your employer, confirm your loan types, consolidate your loans if necessary, and then submit a PSLF form or an ECF. And then if you experience any issues, you should file a complaint with the federal ombudsperson or with the ombudsperson in your state, Celina. So thank you so much. I am gonna pass it over to Lucy and Kat for questions.
Thank you so much, Amy. Wow, what a wealth of information. We do have quite a few questions, and I want to thank Kat Welbeck for being my cohort here in helping me field some of these questions. So you mentioned, Amy, and any of the speakers can answer these questions, please, Ashley, Amy, Celina, too. If you mentioned 501c3s, that people who are working for 501c3s qualify, and then you mentioned that there are some other nonprofits that can also, if you work for one of those nonprofits, you can also qualify. Can you go into a little more detail about that? We have questions about C4s, about C6s. You're on mute, Amy.
I actually was wondering if Ashley would be better suited to answer.
Oh, okay. Okay, great. Yeah.
Okay, Ashley.
Hi, everyone. Yep, no problem. So yes, 501c3s are automatically eligible, but other nonprofits can be eligible too. And it's basically if they fall into a few of these qualifying categories. So it's if it does a qualifying public service like emergency management, public health, early childhood education, and a couple of more. And you can see that on the form on the second page that Amy pointed out. On the second page, it lists those other options. 501c4s do not qualify because they are primarily politically engaged nonprofits. Unions don't qualify. And those are a few of the only bright line rules. Otherwise, if it falls into one of those categories, if it's a nonprofit and it does one of those qualifying public services, there are 6. I always forget the whole list. I'm trying to pull it up, and I'll drop it in the chat. Then you can potentially get qualified. Now, keep in mind that, as Amy mentioned, we have this really great employer tool, but it is not comprehensive, right? There are things that are missing. There are going to be 501c3s that are not in there. There are going to be federal and state entities that are not in there. And there are going to be some of these other nonprofits that have not been adjudicated yet. We call it employer adjudication. So some of those are going to have to go through a process where we look into what service they provide, their status, make sure they're not for-profits, all these things. And that sometimes can take a little bit longer, but don't get discouraged. And also when you put some of these orgs into the PSLF help tool, it may say something called likely ineligible. That doesn't mean it definitely isn't eligible. It just means it doesn't show up in our system and we have to work through it. So don't get discouraged by that either. But the other one, it's way more than 6, sorry. Emergency management, military service, public safety, law enforcement, public interest legal services, early childhood education, public service for individuals with disabilities, public service for the elderly, public health, public education, public library services, school library services, other school-based services. So those are kind of the other areas that nonprofits can fall into that are non-501c3s.
Thank you so much. And just a quick follow-up. We have some questions about if they work for a kind of C3, C4 organization. A lot of organizations have 2 arms. Would they qualify through the C3?
Yes.
Okay,
so
great.
It depends on what's on your W-2, right? So for most folks, they're going to be employed primarily by the C3, and they may do some C4 work. And that's because the nonprofit needs to function like that as well. So it's going to go by what's on your W-2. On your W-2 is the 501c3 your employer? Is that what you are certifying that you work for, the equivalent of full time? So yes, just think of it like that.
Great, Kat, over to you.
You're on mute, Kat.
Thank you, bear with me. Thank you, Ashley. Just a follow-up to Lucy's question. We've gotten a lot of people asking questions again, also about their employer. So just like 2 parts. One, does someone's position within like a qualifying employer matter? So we've gotten a lot of questions about like what position they're in.
Do you want me to do that one first, or
and I'll follow up. Yeah.
Okay. It's about the employer, not the job. So for better or worse, the way that it works is we're not going to ask you what you do for that 501c3. We're not going to ask you what you do for the federal government or what you do for that state agency. As long as that is your employer, that is who is on your W-2, that is who is certifying your employment. Doesn't matter what you do for them. It doesn't matter how much they pay you. It just matters that they are your employer. Okay, so it's not the job, it's the employer. It's not what you do, it's the employer. So for instance, I work for the federal government where we have tons of contractors, but while they may do similar things to some folks in our building, they are employed by a private for-profit company. They're not employed by the Department of Education. So that's what's on their W-2. So it doesn't matter that they may do similar things to other folks in the building. Their employer is what matters.
Thanks. And then the follow-up for that, some people are mentioning that they've heard that some employment verification would be done automatically for some borrowers. So one, can you talk a little bit about like who those borrowers are? And then like when borrowers should expect to hear about those updates in their payment count?
So we are working to automate a lot of things with PSLF, but that also takes time. So one of the big things we're working on is automating certification for people who work for the federal government. So through the Office of Personnel Management. So that involves a bunch of data matching systems, making computers talk to each other, things that I don't fully understand, but that way some federal employees can get automatically certified. We're also exploring doing that for military folks and getting their forbearance and deferments period certified through a match with DOD. We are also looking at ways that we can do that with state agencies. That may take a little bit longer, and we're still more in the preliminary stages on that, I'm going to be honest, but there are efforts underway to automate where we can as much as possible so that we can make it easier. On the flip side, we're thinking about for places where we can't do these bulk matches, how do we make it easier for regular borrowers? We're going to eventually get to digital signatures, so everybody doesn't have to print out a form, go get it signed, scan it back in, do all of that, right? So we want to make sure that we're doing everything we can to make this process easier.
Okay, going back a little bit to the question of being a qualifying employee, just want to clear up contracting employees. So employees that are under contract to nonprofits, do they qualify? Any volunteers qualifying, including like board members? And then the third one is if you have founded your own nonprofit and are the ED of and founder of a nonprofit, can you qualify?
Volunteer work doesn't count. You have to be getting paid for it. Sorry. Contractors don't count. You have to be a W-2 employee. Also, sorry. Can you be the sole employee of a nonprofit? Yes. You can certify it. I mean, if you have like a board, maybe you want to get one of them certified, but I mean, you're certifying the form. If you're the only employee, you can certify it. You're just like everything that you sign is under penalty of perjury. So.
And Ashley, as a follow-up,
we trust you, right? Like I'm not saying that to scare anyone. I'm just saying that yes, we've had those situations and that is okay.
And following up from there, like what counts as full-time for the qualifications of PSLF? We've gotten a lot of questions about people asking about that that clarification between like 30 hours, what their employer considers full-time, or even like pulling together different forms of part-time work to count as full-time.
So it's the greater of 30 hours or what your employer considers full-time. So whichever is more. And yes, you can cobble together full-time. So if you work 15 hours for a 501c3 and you work 15 hours for a state agency and you're doing it all at the same time, that is full-time public service employment. But that means you're going to have to get PSLF forms for both of those employers for those periods to show that time.
Okay, we have a whole series of questions on which loans qualify and kind of different circumstances related to loans. One is around the Parent Plus loans. Can you talk about those?
Another pain point. So it's a little bit complicated. So at the outset, I'll say that there's confusion whether Parent Plus loans qualify at all, right, for PSLF under normal rules. Parent Plus loans can get access to PSLF. However, you need to consolidate them into a direct consolidation loan so that then you can have access to income-based repayment. There is only one income-based repayment that is available to direct consolidation loans with an underlying parent with just the Parent Plus loan, and that is ICR, income contingent repayment. So once you do that, you can start working towards it, and it'll be based on the employment of the parent, not of the student. With respect to the waiver, right? We talked about, or Amy talked about how direct consolidation loans, we're going to look at the underlying loans and give credit for past periods of repayment. That does not apply to Parent Plus loans. So if you have a direct consolidation loan, payments made prior to you, and it was a Parent Plus loan underlying it, payments made prior to you consolidating it do not count, okay? Now, if you have a Parent Plus loan or a direct consolidation Parent Plus loan, direct consolidation loan with a Parent Plus loan underneath it, and you also have student loans, you can consolidate them together and the entire direct consolidation loan can get the credit for that student loan. So if you have student loans from before you have the Parent Plus loan, you can consolidate them together, as Amy talked about, and you'll get credit for that longer period, even towards the parent, for the whole consolidation loan, which now includes the Parent Plus loan. But you have to kind of have this unique situation. If you just have one direct consolidation loan, and it has an underlying Parent Plus loan, or if you're about to consolidate your Parent Plus loan, you won't get credit for that underlying loan unless you have these other loans to consolidate with. I hope that's helpful. I myself find it confusing, even though I say it multiple times a week.
And then as a follow-up to that, several peers have described being rejected in the past for having improper loans. And so if you could talk a little bit more about one, what some of those loans might be and what should those borrowers do to take advantage of this waiver?
Yeah, so that is the biggest thing we're trying to fix, right? For those folks who have those FFEL loans, those federal family education loans, those Perkins loans, right? And who've been rejected in the past, you now get the opportunity to not be rejected. You get the opportunity to consolidate into this program, submit your PSLF forms, and get credit for that time period. That is the biggest piece of the waiver and the most exciting part, because there are so many folks who still have FFEL loans or who have FFEL loans and consolidated late, and who have definitely been working in public service for years. And we want them to get that credit because we know that it's been a confusing program. And so even if you've previously been denied, revisit it. If you have FFEL loans, you can consolidate into the direct loan program. And you want to make sure you have that qualifying employment first. Like we're not telling people to just go ahead and consolidate if you're not sure. You want to check and make sure you work for a 501c3. Make sure you work for a federal or state agency. Make sure that if it's not a 501c3, it is a nonprofit, and that it falls into one of these categories. Check our help tool, right? Look into all those things and then go and consolidate, because there are consequences to consolidating, right? You have to do that to get into the PSLF program and to get the waiver. But if for some reason your employment is not a qualifying employer, when you consolidate, your interest rate can change, your interest will capitalize, a number of things happen. So it is still a decision that you have to weigh.
Thank you. Okay, continuing on the what type of loan, we have questions about, I know that Amy said if the loan is in forbearance, you don't qualify. What if it's been in forbearance in the past? What do people who have defaulted on their loans, is there anything they can do? And I just want to say before you answer that, we have a lot of questions about, does all this information apply in other states? We're a California-based organization, and all of the federal information should apply in other states. The Ombudsperson, Celina, is for California specifically. So, okay, so back to forbearance and defaulted loans.
That's absolutely right. So periods of forbearance do not qualify unless it is this current COVID forbearance that most folks are under if you have direct loans. So this forbearance that we've been in since March of 2020, this forbearance counts as long as you also have the qualifying employment. Some periods of military deferment and forbearance will count, but in general, otherwise, periods of deferment or forbearance do not count. Think of it like this: periods where you were not required to make a payment in general do not count. Even if if you're on an income-based repayment plan and your payment is $0, that is you being required to make a payment. It's just you're being required to make a $0 payment. But if you're in school and so your loans are deferred, if you're in that grace period right after you graduate and so your loans haven't entered repayment yet, if you're in some other type of administrative forbearance or deferment, those do not count under the waiver. So when you're looking at your loan history in studentaid.gov, you're looking for periods that are in active repayment status. Now, on the default issue, time in default, even if you're on a rehabilitation plan or something like that, does not count. However, all the periods up to you being in default count. So when you were delinquent, if you missed a payment, if a payment was late, if a payment was a little bit off, those periods will count because you're still technically in active repayment status. But as soon as you cross that threshold into default, you no longer can get credit under the waiver. Again, all of this is contingent upon you also having qualifying employment. So again, when we're looking at the waiver, under normal rules, we're looking at the payments, we're looking at the repayment plan, we're looking at the types of loans. We're not doing that. Doesn't matter what repayment plan you're on, as long as you are in active repayment status, not in deferment, not in a forbearance other than the ones we just talked about, not in default, not in grace, not in school, then those payments can count towards your credit towards the 120. I hope that makes sense.
Thank you, Kat. Over to you.
Thanks, Ashley. This is really helpful. We've also gotten quite a few questions about, one, can you clarify, we've talked a lot about consolidation. So can you, one, answer, does PSLF apply to private loans? And then two, can you also clarify the difference between consolidating with a direct loan to the Department of Education versus people who may have consolidated with a private lender, and then talk about like that eligibility for PSLF?
So if you have private loans, so if you have loans that are not either originated or guaranteed by the federal government, they are not eligible for PSLF. They are not eligible. If you had federal loans and you refinance with a private lender, so now your loan is owned by like JP Morgan or SoFi or one of those lenders, and not guaranteed by the federal government, because JP Morgan does have some fail loans, right? It is not eligible for PSLF, even if it was previously a federal loan, right? So, whenever you're thinking about how you manage your federal student loans and whether you want to refinance and go private, always keep in mind that once you do that, you lose access to all the federal benefits and programs like PSLF, like income-based repayment, like all of these other options that we have for federal student loan borrowers. Once you refinance, those options are no longer available to you.
Okay, thank you. Just a quick follow-up on the default. Where can people go to find out where they were in the process, and if, even if their loans have gone to collection, so that they can figure out if there's a way to repay and get back on track with loan forgiveness?
The best place to start for any and all information about your account is studentaid.gov and your loan history. That is your best place to start. And then if you are having trouble after that, you need to call your servicer, your default servicer, if you're already in default. And if that is not helpful, we have a really great ombudsman that we can direct you to as well. But the best place you want to start is looking at what's in the system for you at studentaid.gov.
Great, thanks. Kat?
Hopping over, I'll unmute. Also, we've gotten a couple of questions about people who worked for nonprofits for different periods of time. So they may have worked in the nonprofit sector and then gone to the private sector, then back. Can you talk a little bit about how that qualifies for PSLF for non-consecutive nonprofit employment?
It doesn't have to be consecutive at all. You can do 110 payments, take 5 years off, come back and do the other 10 and get PSLF. You can do 119, take 5 years off, go do the other one. Why you do that, I don't know, and get PSLF, right? It doesn't matter. You just have to have 120 qualifying payments post October 2007 when PSLF started. That's also important to remember, right? It can't be anything prior to that because PSLF didn't exist. So no matter how it shakes out, where the months are, it's not about having 10 years, it's about having 120 qualifying payments.
Okay, great, thank you. And speaking of deadlines, can you just one of you go over again? People are really holding in mind the October deadline, the October 2022 deadline. Can you just go over what that deadline means? What is going to end at that point?
After October 31st, 2022, this waiver will not apply. So if after October 31st, 2022, you still have fail loans, right? You haven't consolidated, you have not opted into the waiver for that loan. If after October 22, you don't have any PSLF form submitted, so you never raised your hand for PSLF, you have not opted into the waiver. And so now, if there were time periods before that where you missed a payment or it was a little bit off, or some other things happen, right? Or you were on the wrong repayment plan, you won't necessarily get those credits under the waiver because the waiver has been expired. So, you know, when in doubt, fill it out is what we say. So get all those forms in, you know, like, why not? Even if it's a form you think you submitted, why not? And keep in mind, if you think you've submitted a PSLF form before, pro tip, if Fed Loan Servicing is not your servicer, you don't have a form on file and you need to get one in.
Thanks, Ashley. That's a really, really helpful tip. And then we've also gotten a couple of questions about people when you're talking about the 120 payments. So some people who have either made lump sum payments or overpayments, and they just want to know how those are calculated for the purposes of PSLF.
Yeah. So you can make lump sum payments. It is up to 12 months or up to the time for your next IDR recertification date. So it would be 12 months or less than 12 months if you're like really close to your IDR certification date. So that's fine, you can do that, but keep in mind, it doesn't change the fact that you still have to do the employment for those months. So if I pay a year in advance, I still got to work at qualifying employer for a year and still have to submit my PSLF form to certify that employment.
Okay, thank you. Now, is there any way to make previous nonprofit employment, let's say I'm just hearing about PSLF for the first time today, but I've worked for a nonprofit for 10 years. Is there anything I can do to have that previous 10 years qualify, and what do I do?
Get your forms in. It doesn't matter that you've never submitted a form, right? As long as you've done this, consolidated into the program, you've got the qualifying employment, go ahead and get your forms in. No one is required to submit a form. Some people submit forms every year. Some people submit forms every 2 years. Some people wait till they get all 120 payments and then submit their forms. That's up to you. To get the waiver, you want to have some forms in, but it's okay if you've never submitted a waiver. Never submitted a form. Now is the time to do so.
Okay, Kat, you want to do one more and then we'll start winding?
Yes, yes, and I'm trying to think. There are quite a few questions, but to make sure I get the one. Ashley, you mentioned in your introduction, you're talking a little bit about borrowers who've exceeded their 120 payments and who might get refunds. Could you also talk a little bit more about that? There are a couple of people who kind of wanted some follow-up on that.
Yeah, so if once the waiver is fully implemented and your account is updated, if you exceed the 120 qualifying payments on a direct loan or direct consolidation loan, you will get a refund for those extra payments. So say once we add in your FEL loan, the FEL loan underlying your consolidation loan, because you've already previously consolidated, that adds an extra 30 to your 100, and now you're at 130 qualifying payments. You're going to get a refund for those 10 extra payments that were made on the direct loan. If all of the 130 payments have been made on the FEL loan prior to you consolidating, you won't get a refund on that. You can only get a refund on payments that were made on the direct loan or direct consolidation loan that exceed that 120. So if you're getting a refund, it'll be in the form of that you paid. So if you pay by check, you'll get a check in the mail from like the U.S. Treasury. If you pay by online, you will get a deposit from the U.S. Treasury. I want people to know about this because I just found out that it's really confusing. If it's multiple months, you're going to get multiple checks. You're going to get multiple direct deposits. And so if you're expecting a refund, be on the lookout because it might look like scam mail. I feel like it does. And you don't really get a notification from anyone. It's a whole thing. But it's not just Department of Education. It's across the board. But some people are going to get refunds if you're going to exceed that 120 on your direct loan.
Wow, that is wonderful.
Some people have, and it's exciting.
Yeah, checks in the mail. What can be better than that? Okay, great. Well, thank you. Just one final question is if each of you would just like to give recommendations to people about who they can go to for help with next steps. And we will post your contact information as well. But Amy, Ashley, we know about Celina, and we're going to use Celina in California for sure. Did you want to just, what should people do? Where should they go next if they need one-on-one help?
I was gonna let Amy take that one because they
sure. So we don't currently have anyone we're recommending for one-on-one help, but we do have a series of videos that are shorter on our website. If you go to protectborrowers.org/PSLF, I threw it in the chat, but I can throw it in again. And then again, like your clearinghouse for everything is really going to be studentaid.gov for all the most updated information. Those are my resources, I think.
Wonderful.
And
Go
And
ahead.
I'll just say, if you have an issue with your account, like something doesn't look right, and there's an issue, we have a really great ombudsman. I will also say that after all this is said and done, it takes a while to implement these things, but over the next few months, the waiver is going to be implemented, and then we're also going to have a reconsideration process. So if after all this is done, you still feel like there's a problem with your account, you feel like something should have been certified, a payment should have counted, you will have the opportunity to raise your hand to have your account reviewed later on. So just keep in mind that that's not the end of the story.
That's really great. Well, I can't thank our speakers enough. Thank you so much for this invaluable information. And we have a little bit more. I'm going to show a slide with some resources for folks. But I want to also thank our captioner, Christine, and our awesome CalNonprofits tech team, Henry and Lynn. And I want to remind everybody before I show the resource slide that CalNonprofits is a member organization. There are a lot of great reasons to become a member of CalNonprofits, including access to that discounted Savvy account I mentioned before, where you can get one-on-one help with student loans. And just so you know, we're offering webinar participants 20% off if you join in the next couple of weeks or so for your first year of membership. Okay, and let's go to the contact information. Here is some contact information for CalNonprofits, for Student Borrower Protection Center. Thank you so much for being our partner on this webinar. The Office of Federal Student Aid, thanks for being partners as well, and the California Department of Financial Protection and Innovation. Great to have you all on the webinar. So you will be getting a link to the recording and to resources that were put in the chat and to these slides. So with that, thank you again to everybody and have a great rest of the afternoon.